I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, natural resource specialist at the Oxford Club. His website, InvestmentU.com, U being the letter U. Welcome to the show, Sean.
Thanks very much.
Oil. People are still paying attention to it. You said the U.S. is being flooded with oil from outside of its borders, and I don't think it's from Canada.
No, it's actually from Iraq, which is just really opening up all the taps, and it's going to deliver more oil to the United States than it ever did in the month of November ever this month. It's just huge, an enormous amount. And Iran is also cranking up its exports to the U.S. The funny thing about that is the embargo, or I should say the sanctions on Iranian oil, are still in place. They won't be off until early next year. And so people are wondering about that. You know, why are they shipping the oil here? But I think they'll just join the flotilla of oil tankers that are off our shores right now. We recently had 41 oil tankers sitting off of Houston, which is a big jump, and like stuff like that. So there is oil being shipped all around the world, basically because the world produces about 1.7 million barrels per day more than it uses every day. And so that oil, you know, since we're not using it, it like has to be stored. Since they're kind of filling up the oil storage on land. In fact, the International Energy Agency just came out and said there's next to 3 billion barrels of oil stored around all over the place. So now it's being stored on tankers. Now, we saw this earlier this year, by the way. Saw the same kind of thing, and that really drove up tanker rates. The interesting thing, there's a change this time. Maybe because no one really saw it coming, or they thought people would just have to sell, or whatever, or else really not really sure what that deal is, but people haven't locked in the long-term rates this time around, at least not as much. So we're seeing a spike in short-term rentals and stuff like that. So bottom line, it's all good news for refiners because they get more low-priced products, which they can turn into higher-priced gasoline. And it's also good for certain tanker stocks. Now, we are playing this trend in Oxford Resource Explorer, but we can't be the only ones. I mean, this looks pretty obvious, and so in a time when oil prices seem to be under pressure, and they'll probably be under pressure at least through the first half of next year, this is one of the easier things to do.
What about the people who are planning to make money taking oil out of the ground? Is that something they're going to have to put aside for a while?
Well, funny enough, we have seen oil production drop in North Dakota for the first time in months and months and months. So I guess that's kind of stopping. But I'm seeing reports in the news of all these companies. In fact, Husky's planning a new project because they can make money at current oil prices. And that's because the technology has improved enough that, you know, they can actually make a go of it. This, of course, keeps more pressure on oil prices because, yes, we've seen like the oil rig count, you know, really fall off and stuff, but now they use one oil rig and they drill 6 wells. And so that really doesn't matter. And out of those wells, the amount they can actually produce per well has like climbed 50% in the last couple of years. So you put these things together, at least in North America, there's a lot of downward pressure on the price of oil. And the thing is, it isn't just North America. We are seeing OPEC nations pump, you know, flat out. We're seeing Russia really pump it up. If it weren't for the fact that China is really buying a lot of oil that it is putting into a strategic reserve, I think oil prices would be a lot lower. They could still get lower. Now, my target for oil was $35. We might get down there, but we'll just have to see how things go. But that doesn't mean we can't go lower. I was just using that as a trading target because it seems to be in a range where it can really bottom around 35 and then head up to maybe 55 or 60. So that doesn't mean that we'll get back up to 55 soon. There is a lot of surplus oil in the world, but there are companies that do well when there's an oil surplus. And so I think those are the companies people should really be looking at.
In Canada, the oil companies really aren't passing on the saving from the low price at the oil patch to the people at the gas pump. And as you said, refiners are getting this cheap oil, and they're not lowering their prices as much as you think they might, at least here in the Vancouver area. Yeah,
they kind of drag their feet on the old lowering the oil prices. It's not a monopoly, but it's a oligopoly, so there's very few players in that space. I mean, it's a really big moat to get into the refining business, right? So, plus there's been real consolidation in that whole industry as well. And so what's that mean? That means that they can drag their feet. They don't have that much competition. And if a refiner goes offline, and that happens sometimes, we had that happen in California, and they only had this big refinery recently come back on. Well, that can cause prices to not only spike, but spike for quite a while, even when other sectors of the country are enjoying low oil prices, because we've worked into this system where certain sectors of the country are served by certain refiners. So if those refiners go offline, that section of the country is really out of luck. So it's a complex thing. We are still seeing some energy stocks beaten down beyond all common sense. I mean, the ones that can actually make money at current prices, and there are plenty of them that can do that. The ones that pay a nice dividend, the ones that are using their money wisely to grow their business and stuff like that. There are some good, really well-run companies that you can pick up for big discounts right now. And so I think that's something people should look at as well. That's really with an eye on the longer term now. In the shorter term, you want to play things like refiners and tankers and anybody else who really does well when the price of oil and the price of fuel is low. But for the longer term, now you can start to add to those companies that will pay you to own them and can still do well at recent prices. And, they have a lot going for them.
What happens when all these storage spaces for oil are full? Of course, I heard a prediction back in April, everything's full and you're going to see a dramatic drop in prices, and we didn't.
Yeah, well, there's always more storage. That's the thing. There's more storage being built now. And also, each large oil tank where they store oil has a margin of safety at the top. Depending on the tank, who actually owns that tank, the margin varies between 8% and 16%. 16% is a lot, but I guess some people, they just like to do that kind of thing. So there is more oil storage. And so I don't think we've come to that crisis point yet. But I think the fact that more oil is actually being stored in floating storage on tankers shows you how tight the situation is. Now, trying to predict exactly what's going to happen with that is a mug's game. However, right now we are seeing more oil produced than is actually being used. That means the amount of oil in storage is going to go up. Will we hit some kind of, red zone where prices plunge because people can't take any more delivery? I don't know. But I still think we have some storage left, so that's not something to worry about in the short term anyway. On your website, it said that coal may not be as a black investment as you might think. Oh, I've gotten a lot of feedback on that one. And look, I'm not someone who's actually a huge fan of coal in my everyday life either. It's just as an investor, you have to see the real opportunities there. And there are some. I mean, the demand for coal in places like China and India and the rest of Asia is just going through the roof because they need to get electricity to people. There are still plenty of people that don't have electricity, especially in places like India Here in the first world, we find that hard to fathom. But actually, there's large sections of the world that are dark. And so to get energy to those people, they have to do it, of course, the cheapest way possible. Because if you do it the cheapest way possible, you can get more bang for your buck. What's the cheapest way possible right now? Well, it's to build coal-fired plants. Because as much as the price of natural gas has gone down, and it has gone down a lot, the price of coal has gone down even more, and it can be sourced locally. And so if you're a country like India, you don't have to build this expensive multi-billion dollar liquefied natural gas plant to actually receive natural gas shipped from like overseas. You can just source your coal locally. So it's filthy, it's horrible for the environment, it's horrible for my kids and my potential grandkids, but economics matters in the end. Now, there is one piece of news that is good for people who actually don't like coal, and that just happened Tuesday when the OECD countries of the world, I think that's who it was, but it's the large developed countries of the world. They decided that they weren't going to give any more grants for coal plants, which they had been doing, basically helping these impoverished other nations in the world build new coal plants. Now that was great for the impoverished nations. It was great for the companies that build those plants, right? But here's the thing. I don't think India and China need that money, and they're the places where most of the coal plants will be built. So it's a good news, maybe not so good news kind of thing. People were thinking that was a big thing that would work against coal, this thing that was announced Tuesday, but it may not be the kind of news that's as landmark as you think it is. We're probably going to still see a lot more coal plants built in the places that can afford them anyway, or we'll find some other kind of, real financing to get those things off the ground, because coal is so dirt cheap and it can be sourced locally. Now, I know there are some companies up in Canada that are in trouble because of low coal prices. Believe me, we've had a bunch of companies down here in the U.S. shut down because of that. And the problem is that you might think that they're well-run companies, but it's hard for them to really compete with those mega coal mines over in Australia, which are also closer to Asia, so it's cheaper for them to ship coal as well. So it's like a real 1-2 punch for those companies in North America that are in the coal business. So we'll probably see more of them shut down, but think of this. Think of the opportunity for the survivors. There are some that are the best run companies, and they're probably going to pick up some business from the ones that go out of business. And so those companies, they might go through a rough patch here, but they can probably come out at the end and actually do very well.
Should countries instead be giving grants to promote the use of natural gas, which is a low polluter?
Well, yeah, but the thing is, unless you have a local source of natural gas, then you have to build that big freaking plant to import liquefied natural gas, right? And those are huge. They're so expensive. So I don't think they're going to do that. They have wars to fight and stuff like that, so you know what they're going to spend money on. So, no, I don't think they're going to do it. Should they do it? Sure. They should carpet all the roofs in the world with solar is what they should do, right? And they're already working on some new storage systems for the power, so that's actually going to be one of the most exciting things that we see happen probably in the next decade, is someone's going to come up with a really good storage system for solar power, and you're just going to see whole cities just power up that way. But that hasn't happened yet, so we'll probably see more coal plants built.
We'll have more with Sean Brodrick right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
More and more people are looking to the internet. For intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600. 604-699-8600.
Welcome back. We're speaking with Sean Brodrick. Sean, any ideas on what's going to happen to the price of gold right now?
Well, the price of gold does not look good. Let's just put that out there. The price of gold looks terrible, but silver looks worse, and that's because silver is both a industrial metal and a precious metal, and both of them are under pressure for different reasons. Let's just sidetrack into industrial metals right now, right? We saw the price of copper hit a 6-year low. 6-year low. That's huge. Iron ore, the iron ore producers are in some kind of suicide pact. There's a new iron ore mine starting up in Australia, like the world needs more iron ore. And there's going to be a new one starting up in Brazil as well. So no one in the right mind would actually invest in iron ore right now. That's just crazy. And zinc, we keep hearing there's going to be a zinc shortage. Well, you can't tell by zinc prices. So there's a lot going on that's really just, really holding the metals back as a group. Now, this all goes back to China. People see the Chinese economy slowing down, and it's those whisper numbers that really get to it, which is that people are saying, we won't see China grow 6%. We won't see it grow 5%. It'll be lucky to grow 3%. Heck, maybe it's not even growing at all. I think that's just hysteria, frankly. And I think China is going to grow. They have $3.5 trillion in foreign exchange reserves that they can spend on things if they want to. We know they're trying to boost their economy already. They just lifted their one-child policy, which you can bet there's going to be a bunch of Chinese people getting busy making babies. And what do babies need? They need everything. I know. I've had two myself. Believe me, you buy a lot of stuff for those kids. So there's some things going on in China. I think that we might not see the 7% growth that they're looking for in the next year, but we'll still see growth, and we'll see them use more metal year over year. It won't be the fantastic growth that we all got used to, but it will be more. So it's kind of a panic situation in the metals markets right now. And one thing that I do want to mention is the Chinese love to play the metals markets, more so than you might think. And there have been reports that Chinese hedge funds are really lining up on the short side, things like copper and stuff like that. So they could make a last push to really drive things lower. When they get them super low, that's when they'll turn around, close their bets, and then buy it. So we can probably see that happening. This all brings me back to precious metals. I actually like precious metals more than industrial metals right now. We've seen some big buying in China. They're just buying a lot of it. We've seen strong demand elsewhere in the world because the low price is actually stimulating real demand in things like jewelry and like, say, coins and like stuff like that. Third quarter silver coin sales were huge, and I think the sales of like the gold coins were just really huge. So that was in the third quarter. Now, October's always an off month. People have probably been looking at the October numbers and saying, well, we blew everything in the third quarter because the sales in October went down. They always go down. November's when things start to pick up again. We'll probably start to see those numbers reported early December, and so that's when I would look for things to really pick up in the precious metals area. I think we're a lot closer to the bottom than any kind of top in precious metals. There's not a heck of a lot of companies that can make money at recent prices. And we could see another problem with something like, say, Glencore, which recently closed some mines. Well, you know what? Their problems aren't over. They might have to shut some more things down. And we could see that happen in other areas as well. Precious metals miners. Glencore isn't known for precious metals, though it did produce some. But a big precious metals company could have a problem if prices really got lower. So we'll have to see that goes. I'm not long precious metals at this moment, but I'm looking for entry opportunities because I think we're a lot closer to the bottom than the top.
Something we rarely talk about is the diamond market. The people who buy diamonds, the rich and the newly engaged, they don't seem to worry about prices too much.
Yeah, I don't really know much about the diamond market, every now and then I follow it, but right now I'm not. I've heard that it's not as strong as it should be. And, there could be a lot of reasons for that as well. I think that there's nothing wrong with anything like that. I have actually been on an expedition hunting for diamonds. They aren't easy to find. They are not easy to find. And not only do you have to find them, you have to find enough to make whatever project you're on actually economically worthwhile. That's the real rub. Because you can find some strain ones, some stray diamonds, but not enough to actually power up any kind of mining camp and stuff. So, yeah, it's rare, that's good. But then we always hear those rumors, don't we, that the Russians have incredible amounts of diamonds that they haven't released to the market yet. Really, everything is in flux nowadays. I do expect oil prices to go lower. Oh, one thing we haven't talked about is the strength in the U.S. dollar, which is knocking on overhead resistance. But if it breaks out to the upside, it could run for a while. Now, here's the thing. The U.S. dollar has gone up recently because the U.S. Fed has pretty much locked in a rate hike in next month. And so they're looking at that, and so we've seen that run up. But to continue, because that will be priced in very soon, to continue we'll need more good news. And so that's something to keep your eye on, because if the U.S. dollar can't get more good news and everyone switched all to one side, what's going to happen? Then the U.S. dollar is going to sell off. Things like oil and gold and you name it, they'll go higher. So we could see that kind of reversal just in time for Christmas. We'll see how that goes.
We'll see what Santa brings.
Yes.
Thanks a lot for speaking with us.
Hey, it's always a pleasure. Thanks for talking to me.
My guest has been Sean Brodrick, Natural Resource Specialist at the Oxford Club. His website, investmentu.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.